Welcome back to AI Explains ICT. All right, we've all been there, right? That feeling when a perfect-looking setup just turns against you and leaves you with a loss. It's one of the toughest parts of trading. So in this video, we're going to break down one of the most vital skills you can have, a plan for how to handle it. We're going to build a repeatable plan for recovery, pulling directly from the playbook in ICT's core content, Month 2, Episode 5.
So, let's put you in the hot seat. You've just taken a loss. The trade is closed, the damage is done. What is your very next move? I mean, this is a moment that hits every single one of us, whether you're brand new or you've been doing this for years. And that next decision you make, it is absolutely pivotal. Okay, first things first, let's just get this out in the open. Losing trades, they're gonna happen. It's not just possible, it's a guarantee in this business. So the goal isn't to never lose. That's impossible. The goal is to have a rock-solid plan for when you lose. So let's walk through a scenario that probably feels pretty familiar.
All right, so picture this. You've been staring at the charts, you've done your homework, and you spot it. It's a beautiful setup, just like what ICT teaches. You've got this bullish order block. You've measured out that mean threshold. Everything is screaming, go long. So you decide to take the trade, placing your entry right there on that secondary order block. Looks perfect. So you pull the trigger, you're in the trade, feeling pretty good about it. And then the market just decides, nope. Instead of that rally you were banking on, price starts to sag, and then it keeps dropping. It's heading right for your stop loss. You know that feeling, right? Your heart just jumps into your throat. And boom, there it is. Your stop loss gets smacked. Maybe you had it a little too tight, just tucked under that mean threshold. But hey, it doesn't matter now. You're out. And let's say for this example, you were following a strict 2% risk model. Well, you've just officially booked a full 2% loss on your account. The trade failed, period.
And right here, this is where the real fight starts. And I'm not talking about the charts anymore. I'm talking about the battle inside your own head. What you do next can literally make or break your account.
So you've got this fork in the road. On one side, you have that little voice in your head, the gambler's brain, and it's screaming, get it back now, go bigger. It's all emotion, pure revenge trading. But then there's the professional's path, taking a step back, taking a breath, and asking, okay, that's done. But is the whole idea invalid? Or did I just mess up my entry or my stop placement?
And you know, this quote from ICT just hits the nail on the head. He says, if you're a gambler and you risk a lot of money and you don't feel any pain, that's a problem. Think about that. If you can take a big loss and just shrug it off, that's not a superpower. It's a massive warning sign that you're just throwing money at a slot machine.
So if going bigger and chasing the loss is the absolute wrong move, what's the right one? Well, the ICT method for this is going to feel weird. It's totally counterintuitive, but it's all built on that number one rule: protect your capital.
And here it is, the big secret. You ready? It's just this. Cut your risk in half. That's it. That's the rule. Let's make sure we're on the same page here. If you risked 2% of your account on that first trade and got stopped out, your next shot at that same setup, you're only risking 1%. If you lost 1%, you drop down to 0.5%. See? This one rule acts like a circuit breaker. It stops the bleeding and forces you to be disciplined when you need it most. So what this gives us is a super clear 4-step playbook for recovery. Step 1, you gotta look at the chart again and ask, is this setup still good? If the answer is yes, then step 2, you get back in, but with half the risk. Now here's the magic part. Step 3, your target is now R2. That's a profit twice the size of your new, smaller risk. And if you hit that, step 4, you've just completely wiped out that original loss. Okay, so let's get back to the charts and see how this whole thing actually plays out. This is where you see how powerful this idea of cutting risk really is. And here's where it all clicks. Remember that initial 2% loss that felt so bad? Well, because we're now risking just 1%, when we hit that R2 target, what do we get? A 2% gain. The math is just perfect. The new gain completely wipes out the old loss. You're back to break even, and you didn't have to do anything crazy or emotional to get there.
And check this out. This is so important. Look at where you got back to even. You didn't even have to wait for the price to break that old high. You erased the entire loss with a much smaller, more realistic price move. Now that is smart, defensive trading.
So you did it. You followed the plan, you stayed disciplined, and you clawed your way back to even. Awesome. But now what? Well, now you've got another decision to make, and ICT lays out 2 very clear paths forward. Okay, path number 1 is for the newer trader.
And the advice here is simple. Take the profit. Close the trade, get your account back to where it was, and just breathe. Your biggest win wasn't the money, it was sticking to the plan. Now, for the more experienced trader, there's path 2. You can lock in that break-even point by moving your stop up and then see if this thing has more gas in the tank. You're basically playing with house money at that point.
So why does this work so well? It's about so much more than just one trade. This is about building the habits that keep you in the game for the long haul. It literally forces you to respect your risk. It shuts down that urge to revenge trade. It protects both your bank account and your sanity. Most importantly, it's a plan that stops one single mistake from snowballing into a week-long losing streak. It gives you confidence because you know exactly what to do when things go wrong. And that really leads to the final question you have to ask yourself. After seeing all this, knowing how easily one bad trade can turn into a disaster, and knowing there's a disciplined, repeatable plan to recover, can you really afford not to do it this way? Hey, if this breakdown was helpful for you, do me a favor and hit that like button. It really helps the channel. And make sure you're subscribed so you don't miss our next deep dive into ICT's concepts. Got any questions? Drop them in the comments below. A real human will get back to you. All right, that's it for now. Stay disciplined and trade safe.